If you're wondering what the central New Jersey housing market is going to look like in 2026, you're not alone, and you've come to the right place. I talk to buyers and sellers every day in towns like Basking Ridge, Bernardsville, Bridgewater, Warren, Far Hills, everything around Basking Ridge in Somerset, Morrison, Hunterdon County, and sometimes Union. Everybody is asking some version of the same question. And that question, is it finally getting easier to move? Well, I'm here to tell you that the short answer is yes. Slowly, but meaningfully. And in this video, I'm going to walk you through what the data actually says about mortgage rates, inventory, pricing, and sales activity for 2026. So get yourself a cup of coffee, settle in, and we'll talk about how those things translate to real decisions here in central New Jersey. This is not hype, it's context. For the last few years, the biggest challenge in the New Jersey real estate market has been affordability. Rates climbed really fast, inventory stayed really tight, and prices either held firm or rose. A lot of people wanted to move, but they didn't want to make a bad financial decision. So the result, buyers waited, sellers stayed put, and the market felt stuck. What's changed is not one magic thing. It's several trends that are finally starting to line up at the same time. And that's why economists expect 2026 to feel very different from the last 2 years. So let's start by talking about mortgage rates. Mortgage rates are no longer at their peak. Can we get a hoorah? Over the past year, rates came down close to a full percentage point. In higher priced central New Jersey towns, that shift has had a very big impact on monthly payments and therefore buying power. Most forecasts, including Fannie Mae, the Mortgage Bankers Association, Wells Fargo, they expect the 30-year fixed mortgage rate to hover in the low 6% range throughout the coming year. Could they dip a little? Sure. Could they rise a little? Also sure. It depends on inflation, the job market, and what the Fed does next. Also, interestingly enough, this week, President Trump advised his representatives to spend $200 billion in mortgage-backed bonds. Mortgage rates tend to follow bond rates, so you would think that this is going to make a difference in mortgage rates. It might only be about 1/10 or 1/4 of a point, but if it works, every little bit counts. So here's the key takeaway for buyers and sellers in Somerset and Morris County, Hunterdon and Union as well, and probably the whole state. Rates today are meaningfully better than they were a year ago. Waiting for the perfect rate has kept a lot of people on the sidelines longer than they planned. So buyers, these lower rates will increase flexibility and hopefully open doors that felt closed to you before. And sellers, rates in the 6s are likely the new normal. If you need to move, it's doable, especially with the equity that most long-term homeowners have built in the last 5 to 10 years. Now let's talk inventory, because this is where the market really starts to feel different. In 2025, housing inventory improved roughly 15% nationally. We felt a little bit of that locally. Buyers in Bernardsville Township, Bridgewater, and nearby towns finally had a few more options, a little more time, and more negotiating leverage. According to Realtor.com, inventory is expected to grow another 9 or 10% in 2026. That's great, but listen, it's not a flood of homes. It's simply continued progress towards balance. Also, I want to touch on something else. Many people believe that there's been an influx of corporations buying single-family homes. President Trump has suggested making that illegal. Corporations shouldn't be able to buy single-family homes. Now, so that sounds like it might make a big difference, but you have to understand that's only going to help in areas that are impacted by companies such as Blackstone buying single-family homes. Truthfully, those companies only account for 7% of single-family home sales. And like I said, that's not everywhere. It's certainly not here in central New Jersey or in anywhere in the Northeast. So while it's good that the government is starting to look at what they can do to ease the affordability issue when it comes to housing, we got a long way to go. So, buyers, what does this inventory ease mean? Well, more listings means fewer rush decisions and better leverage. For sellers, you may have more competition now, So pricing matters more than it has in years. The market's not going to chase an overpriced home, even in a great location. Presentation, strategy, and pricing discipline is what wins now. Here's the part where I'm going to tell you not to listen to the noise. Social media tends to get very loud and is often misleading. As inventory improves, price growth cools. That's normal and it's healthy. Remember, we're looking for balance. Nationally, most economists project home prices to rise less than 2% in 2026. That's not a crash. It's not a boom. It's normalization and balance. Here's the most important thing to understand if you're buying or selling in 2026. Real estate is local. Some towns will outperform the national average. Some price points will flatten, some homes will sell quickly, and others won't. National headlines do not tell you what's happening in your backyard. So buyers, connect with a local agent. Expect more predictable pricing and fewer extreme bidding wars. Sellers, slower growth protects your equity without the volatility that we've seen earlier in this decade. And yes, I said decade. I've been selling real estate for almost 2.5 decades, longer than I've ever done anything else before. And I love serving you. When mortgage rates stabilize, inventory improves and prices normalize and affordability follows. That's why economists are expecting more homes to sell in 2026 than in the past 2 years. We're already seeing early signs of that across the areas we serve, Somerset, Morris, Hunterdon, and Union County, especially among move-up buyers, downsizers, and homeowners who delayed selling due to mortgage rate uncertainty. Zillow's chief economist summed it up pretty well. Buyers benefit from better affordability and selection, while sellers benefit from price stability and consistent demand. So everything that I've spoken about today, in plain terms, more people will finally be able to move forward. Here's the bottom line. Affordability is not fixed overnight, but direction matters. And right now, the trends that are shaping the central New Jersey housing market for the coming year are finally working together instead of against each other. This is shaping up to be a more balanced, more predictable market than we've seen in years. If you're trying to figure out what this means for your town, your price range, your timing, that's where local context matters. If this video was helpful, please click the subscribe button, click the little bell. You'll be notified every time I post a Central New Jersey real estate market update. And if you'd like to talk through your situation, I'm happy to have that conversation. Drop a comment, send a message. Let's get it started.